Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Tesla, ticker symbol TSLA. And so I wanted to go over this because they reported earnings and tanked following earnings. So it looks like they're more than 12% down on the day, January 25th, which is a Thursday. And it looks like they're up a tiny bit in the after hours, but just a fraction of a percent. So I don't think that's too significant. And yeah, I just wanted to go over some levels that stand out to me and basically where I think the stock will be going, perhaps over the next month. And so I did do kind of an earnings video earlier this week going over some of these lines, but I will review them here just for you guys. And so I do have a couple that are grayed out that I don't really find to be relevant right now. So I am going to skip over those. And so basically what you do see here is this orange line, this uptrend that I viewed as being potential support with a touch point down here and on the low of, let's see, April 27th, as well as I believe the low of October 31st. And it did look like price was breaking through that a little bit just before earnings, but I had viewed that this red line was pretty significant at $208. That actually goes back, let's see, to the lows here at the end of May 2022, served as support there as well as here. More recently, resistance, support again. Did break through a little bit here. But yeah, I was expecting that to hold up. And I was expecting the price to bounce following earnings if the close prior to earnings was above $208. And actually, what we did get for a close on January 24th was a close of $207.83. So just below that level that I viewed as key, or at least just psychological, the round number of $208. And also, with the price being below this uptrend, did not look too good, so price did drop. And there are a couple levels that stand out to me. This white one I will come back to. It actually relates to this gray one up here, and so I do think that is an interesting perspective that I will come back to. Like I said, this yellow line here is at $177.90. That is based on the close of January 27th, 2023, so just about a year ago. And it does look like over here it was tested as support, even though it had broken through briefly here. Tested as resistance here, support again for a last time. And so now price is returning to that level, being just above it right now, having a low on the day, let's see, of $180.06 with a closing price of $182.63. So pretty close to that level, $177.90. Yeah, this candle for the day could be more bearish if the close was closer to the low of the day, but the close is still, on the bottom half of that candle relative to the wick at the bottom, the tail of that candle. So, I do feel like price will continue down, and I do think it might settle around this yellow line. However, I do think it is quite possible that it will continue down, especially if it breaks this white downtrend, which to me looks kind of like, a head and shoulders, a little bit ugly, like with, pretty big, high shoulders. But, there's a shoulder over here, kind of a double head, and then this shoulder. So I'm wondering if that is the neckline, and if price does continue down and break through that, I think it could be going much lower. I should note with that, that I had initially thought that there was a neckline up here, with this being an inverse head and shoulders, with the right shoulder potentially being formed here, and I was expecting a bounce if the close was above 208. We did not see that, and so this inverse head and shoulders is invalid. And so now I'm just wondering if this head and shoulders, or double head and shoulders could be in play. So I will be really curious to see if we do get a close below 177, really if we do see a close below this trend line, which is based on the low over here, let's see, August 18th, 2023, and that is based on over here, the open on October 31st. And yeah, so that's how you draw that line. And so I'm really curious to see if we do close below that. And then you might notice this blue line that I have drawn down here. That is at $146.50, which is based on the high on, let's see, January 24th, 2023. So almost exactly a year ago. And also, let's see, the 25th, the high was $146.41. So if you're looking at that gap that was formed there, that was the high before the gap, just before it. But I have the line marked at $146.50. Seems like a level that price could be returning to. And then there are two other factors that I do think support the claim that price could be going down to that level, which stand out to me. One, not as much as the other. I'll first go over that, and that would be based on a measured move from the head and shoulders. So if I take the measurement from the top here down to the neckline, and then I just move that to where the break would be, I don't think price is actually going to go down this low. That would be $105.31, retesting the low over here. But I do think that is possible. But what I do think is more realistic is not a full retrace down to here, but a different level from a Fibonacci retracement, which I will draw up here right now. And so if I take the measurement from here, the low of 101.81, and take that to the top over here, which is, let's see, a high of 299.29, I believe. So hopefully I can get that lined up just right. It's approximate. It's going to be approximate. And so from this retracement, what you can see is the 618 lines up beautifully with the yellow line that I have here at $177.90, where price basically is currently at. So hopefully that can serve as support. But if that does break, if we do break below this trend line, this white trend line here, the 786 lines up again almost perfectly with the level that I have down here, which would be a gap fill at $146.50. This retracement is at $144.44. So, just right around 144, 145, price could be going down there. So if we do see some weakness over here, if we do see some consolidation and no real bounce, that could be bearish consolidation, a bear flag forming, and we could see a break down to this level. And if that doesn't hold, I do think we could get a full retrace based on this measured move from this double-headed shoulders, which might be invalid. But I do think it is good to be cautious at these levels. If we do break below 177, I think 145 is the next target. So be prepared for that. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.